watching CNBC-TV18. This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studios here in Mumbai. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, good morning.
Good morning.
Starting another day and fingers crossed. Yesterday was a down day and one hopes that maybe, we get out of it soon enough. Let's just quickly tell you what the global setup is looking like. It's not looking very positive. I think that is the one thing which one has to point out. And the reason is very simple. It's basically the payrolls hangover, the payrolls pain, or whatever you want to call it. But, the jobs data on Friday out of the US for the month of January was so shockingly strong that it's shaken people. People are asking whether the labor market, if the labor market is so strong, how can the Fed take its foot off the pedal? How can they do one more 25 and be done with it? Won't rates have to go higher? So that debate is raging and a market suffered. So what is the dynamic that you have? You have the Nasdaq, which was down 1% last night. So that's, of course, tech, which is long duration stocks, which sold off. You have bond yields, which have surged. The 10-year is now at about 3.62. That's about 12 basis points higher. The 5-year was up 17 basis points. These are large moves. And you've got the dollar index. It was looking closer to 101. It's now closer to 104. So, this is basically the global picture, which I think is exerts some pain broadly. I'll get to more on this just a bit. But, just today, later today, you have the Fed Chair Powell who will be speaking. He'll make a speech and markets will wait to hear from him. He is the man. He's the guy on last Wednesday who said disinflation 10 times and got markets very excited that maybe, the Fed is finally listening to inflation data coming off. So if later today he kind of backtracks a little bit, he pays attention and focuses on the jobs data, which is very strong and strikes a cautious tone, I think markets will take note in a very strong fashion. And of course, the opposite is true as well. So that's something which we will watch out for. Coming to the market here, I'll get to Nifty and Bank Nifty straight up. For the Nifty, we lost about, 80, 90 points yesterday at close, 0.5%. The 20-day is still the relevant reference point. That stands at 17,893. That's a resistance on the upside, which I think comes into play. And of course, the budget day low at about 17,353 is the reference on the downside. You can look at the daily Bollinger Bands, etc. That comes in at about 17,500. The very, very, very near term would be the 17,500 kind of zones. Bank Nifty seems to be in a bit of a better shape as compared to the Nifty. It lost about 1/3%. The 20-day there is 41,781. And on the way down, the near-term level is, as I said, the daily lower Bollinger Band, which is at 40,147. These are near-term pivots which you would want to use if you're trading. Where to put supports, where to put stops, etc. Just one more thing, and this kind of ties back to the changed global situation. The rupee is under pressure, severe pressure. The rupee has lost over 2% against the dollar in the last 10 sessions flat, right? It's now closer to 83. The previous high was 83.3 to a dollar, and that's basically from where it kind of snapped very sharply and turned. And back then, there was a fair bit of chatter in money markets that the RBI intervened. An interesting statistic, the last time the dollar rupee was at 83, the dollar index, the DXY index was 115. The dollar index now is closer to 104. So the question is, will the RBI step in to protect the currency once again, now that we are closer to the 83, the previous highs or so? That is an important dynamic for equity markets as well, which we will talk more about a little later. Guys, hi.
Hi, morning. In fact, across the board, right, the US markets, the European markets have all ended in the red. So in that context, the global handover is not too great either. There was no major sell-off, but a close in the red for sure. Even for our own markets, the Nifty continues to face resistance around that 17,800 mark on the upside. And the bulls are sort of on the back foot after what happened in the last few days. There was selling to the tune of almost 1,200 crores from the FIs yesterday, and put together in the last 3 trading sessions, just in 3 trading sessions, the FIs have sold about 5,200 crores. In terms of data this morning as well, results not looking that great. Tata Steel's numbers were weak. The European business is under quite a bit of pressure. That whole pocket, actually, the European market has been suffering quite a bit. So all the companies that have an exposure there are seeing a slowdown in growth. In fact, Apollo Tyres in their conference call said that Europe is looking very challenging even in the first half of the new fiscal. Apart from that, Adani Group stocks will of course be in focus. There was a recovery yesterday. The promoters are reducing their pledges. Adani Ports was up 9%. So we'll keep an eye out on that. In terms of results today, there are big numbers. There's Bharti Airtel, there's Adani Ports, there's Ambuja Cements, a lot of companies in the capital goods space as well. So we'll watch for that. And tomorrow is the RBI policy, although market people believe that a 25 basis points rate hike is something that's perhaps priced into the market. So it's not market moving in that sense. Perhaps a range for the market, and the 17,800 on the upside could prove to be a bit of a resistance zone. But other than that, I think it's, a lot of the to and fro with respect to what comes out of the Adani Group and the global markets that continue to put a lid on the game.
Well, yesterday was a far better day than what we have seen in the past. The last 7 days, the average between the high and the low is around 330 points. Yesterday, the difference between high and low was only around 120 points. So it seems that maybe we're getting at least into a phase of stability. At least that's the hope. The other factor yesterday was, though the Nifty ended in the red, you had the broader markets that outperformed, both the mid and the small cap indices, and I like that. Portfolios feel good when the broader markets perform. And everyone's talking about the Adani Group stocks, and yesterday some of them did pop up and trade. But most of them were all F&O stocks, the ones that are available in the derivatives market. So possibly there is some short covering that's taking place. Otherwise, a lot of those cash market stocks, they continue to reel at lower circuit, whether it's Adani Power, Transmission, Green, Wilma, all of them were at lower circuit in yesterday's trading session. So, if things are going to get resolved, then maybe at some point of time, some of these cash market stocks as well could see some green. Then you'll be far more relief. For the time being, it appears there is more short covering that's playing out. What are the FIs doing in the F&O market? They added short positions. They added short positions, big time, close to 22,000 short contracts is what they added. And now their short positioning has moved to around 85%. I've seen it in the past when it goes from 85 to 88% odd. We see a bit of a short covering bounce that plays out. Can we get some good news from somewhere? That's what could take us closer to around that 18,000 odd mark. For the time being, though, they're positioning themselves quite bearishly because they wrote 1.3 lakh calls in the ratio of 5 calls for 1 put, telling you that at higher levels, we are going to see supply. What were they writing? 17,800 call, 18,000 call, 17,900 call. Between 3 of them, they added close to around 80 to around 90 lakh shares. So aggressive writing is what we saw at those calls. And the Nifty Bank, that was beginning to find its mojo or its rhythm. Yesterday, in fact, there was some writing out there. More than 10 lakh shares were added at 41,500 call. So for these call writers, if they're going to pocket the 300 rupee premium, then in fact, they are putting in a resistance at around 41,800, 41,500 plus 300. So you're getting a resistance zone out there. And in fact, that's where the 20 as well as the 100 DMA of the Nifty Bank are around. On the downside, we last bounced from around 40,700. So I'm counting on that level holding out as well. For the Nifty, well, today we're likely to start off with the resistance zone, going by the SGX Nifty. You have the 20 DMA out here, and also you have yesterday's high that's at this particular resistance level. So 17,850 is a very crucial mark. If we can get above that and trade above that, then it's good news. But I think we'll be met with some resistance from the word go itself. On the downside, 17,600, a bit of a support. We're going to start off in the green. Holding on to that is going to be very, very important. I think that gets sold into at some point of time, though. If you're looking to buy, you'll need to look to buy closer to around 17,600.
All right, Nigel, thanks for that. Well, before we start and get the ball rolling, let's quickly tell you what's lined up here over the next half hour or so. We will get you the latest updates on the Adani Group crisis and discuss the broader implications with Marco Papik, partner and chief strategist at Clock Tower Group. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. And at around 8:30 a.m., we will do a fundamental stock analysis with Deepan Mehta of Elixir Equities.
All right, let's get you some views now on the equity markets. First up, we have a comment coming in from Gautam Duggad of Motilal Oswal Financial Services, who expects the markets to be range-bound. In the absence of any large cues, he says the market is likely to derive cues from global markets and from corporate earnings. They have seen positive earnings coming through from the likes of SBI and ITC and would accumulate these at current levels. They already have both SBI and ITC in their portfolio. He also says BFSI and tech stocks have met expectations this earnings season.
Well, some money market views. Bhaskar Panda of HDFC Bank says robust US jobs data has pushed up yields, forcing a rethink on terminal Fed funds rate. He says the dollar index has rallied, riding on this as mild risk-on sentiment persists, forcing Asia ex-Japan currencies lower against the US dollar, even as oil is sideways. Given this background, he adds the INR lost almost 1% against the dollar, forcing the dollar INR pair to trade at 82.75, closer to 83. Yesterday, Bhaskar says things look to be calmer today, and hence he expects the dollar INR pair to trade in a range of between 82.5 to 82.8 to a dollar for the day.
All right, and on the bonds, Bhaskar Panda says Indian benchmark bond yields have settled in a bit higher as participants await RBI's policy due this week. Meanwhile, he expects the 10-year benchmark yield to trade in a very narrow range between 7.3 to 7.35% at the moment.
Well, there are a lot of stock-specific action they're going to be tracking for you, and we'll get to that in just a bit in our special Top 10 segment. Well, we're looking at Adani Transmission, Apollo Tyres, Muthoot Finance, and JK Paper. They are stocks on the back of positive news flow, while on the flip side, you have Tata Steel, Hindalco, LIC Housing Finance, Balaji Amines, V-Mart Retail, as well as SJVN. They are stocks that could open up potentially in the red.
All right, Marco Papik is joining us now. He's partner and chief strategist at Clock Tower Group. Marco, great to have you with us here on the program. Thank you very much. You are a macro investor, Marco, and I know that you've sort of taken note of what the turmoil we've seen in Indian markets because of the troubles at one of the big business conglomerates, the Adani Group here. How has the view on what's happened evolved from an overseas perspective, Marco? Because this is still an ongoing situation here. Go on.
Yeah, so, it's interesting. First of all, thank you so much for having me on your show. It's very interesting because in the West, and in the US in particular, this has been covered really in great detail, focusing on the report by the Hindenburg research firm and the Adani Group. So there has been a plethora of focus on the specifics, which I think is interesting because you would think that people in the West would take a more broader macro perspective on India itself and not obsessed about an individual group, no matter how, of course, important it is to the economy. Why? Well, because allocation decisions by large institutional investors in the West and in Asia and the Middle East, we're talking about CIOs that manage hundreds of billions of dollars. They're not really focused on an individual stock. And what's really happening is not a crisis of the Adani Group. What's really happening is that China decided in October of 2022 to resolve a lot of uncertainties about its governance, its foreign policy, and the direction of its economy. So following the October Congress in China, you basically had a commitment by policymakers there to focus on growth, on ending the TMT sector, the IT sector crackdown, which began in 2021 and helped Indian stocks immensely in that year, to end some of their political and geopolitical assertiveness, which also helped Indian stocks in 2022. And so that pivot in Chinese policy has awoken appetite for China allocation by many institutional investors. And that creates a very pernicious context for India, a context in which something like the Adani Group crisis then becomes really just a spark that forces many CIOs to shift allocation away from India and towards China.
Okay, that's interesting. So you're saying that because of what's happening with the Adani Group, perhaps there would be a little bit of a sentiment overhang and money could move out of India and into markets like China, which in any case has been the narrative even before this this crisis, right? But I'm just trying to play the devil's advocate here. Not all global banks are pessimistic on the Adani situation. I'm just quoting two notes, one from Goldman Sachs that told investors on a call that Adani debt had actually bottomed out in the short term and that the bonds of Adani Port and the SEZ have now become interesting at the current price. So that's one. And on the other hand, JP Morgan put out a note where they said that there is eventual asset value on the regulated ring-fenced assets of Adani and they have a preference for the bonds issued. So there is the other side as well that believes that at some point there will be value in this group. How would you react to that?
Well, first of all, I have no idea. I'm not a bottom-up investor. Like literally, I know nothing about individual stocks. I cannot speak to anything, and I don't care. A macro investor focuses on a top-down perspective. And so, you're going to have babies thrown out with the bathwater, which is probably what's happening to the Adani Group at this point. And if you step back and really think about Indian performance since 2020, since the pandemic, Indian equities are the best performing market in the world, even better than the U.S. And there's really two things that helped India over the course of the last 3 years. One is that the IT sector does have the second largest weighting in the index, and obviously tech stocks did extremely well in 2020, 2021 across the world. And the second issue is that if you were an EM allocator, if you needed to allocate to emerging markets in 2020, 21, 2022, what you saw in China was really scary. And so what you did is you hid in India. You basically took your allocation out of China and you opted in India. And I think that that's now reversing. So I think those notes are probably correct. There probably is a value in the Adani Group. But as a macro investor, I'm just saying, I think that these headwinds to Indian equities are going to persist for some time. And so it's very difficult to start bottom fishing Indian assets at this particular juncture, especially as commodity prices start going up and as the negative relationship between Indian assets and commodities reestablishes itself this year.
Hi, Marco. Good morning. Marco, but, how much of that shift from China, to China from India has happened? Because the Chinese markets are up 40-45%, right? They're not as cheap as what they were, say, in October end or November beginning. And the Indian markets have not really done much. And besides these two, what about the Taiwanese index? Just reading a couple of reports on the MSCI emerging market. Now, Taiwan has pipped India post this recent underperformance that we've seen to second place. So your take on how much of this has already played out, the shift to China, and any other markets you're tracking?
Yeah, so I think it's hard to time that. India still remains, in terms of various valuation metrics, the most expensive market in the emerging markets. So again, you got to put a hat on of a foreign asset allocator sitting on hundreds of billions of dollars. They have an EM book, and they're looking at what's going on around the world. India's expensive. They're moving out of India. And this Adani Group is just noise, but it's pernicious noise. It's negative noise. So I would say that there is still a lot of room for this to go, especially because China's been underperforming for about 18 months. And, you had this interesting year in 2021 when Indian stocks were on fire, but commodities were also on fire, which was a very strange macro event. Indian stocks looked through that. They looked through all sorts of other things in 2022. So you had multiple years of outperformance. This is a little bit of a hangover from that. In terms of what other emerging markets would I be excited about? Anything that has to do with commodities. So Latin America is very interesting, and I think is going to do very well. Indonesia's been on fire recently as well. I also think that Saudi Arabia, although it's probably due for some indigestion, should do well as well if our oil call is correct. And we do expect oil prices to bottom and start moving higher over the course of the year.
Okay. Marco, just one last from me. You're a macro investor, and I think this is right up your alley. For India, one of the big concerns has been the fact that maybe the globe, when we began this year, or maybe even late last year, that the globe is slowing down very fast, or will slow down very fast in 23. But as the jobs data in the US shows, maybe it's not, right? So maybe we will get away with much lower inflation, but not much weaker growth in the US. And then you described what's happening in China. I mean, is the global environment really going to be so bad for assets like equities? What's your sense?
No, actually, I haven't been bearish. I've been writing for 6 months. I have no idea why everybody thinks the recession is coming. But let's put this into the Indian perspective. I'm not sure it's a good thing that everything is fine for India. India, for me, is like an anti-growth market. You hide in India. Why? Why do you hide in India as a foreign allocator? Because India has a huge domestic market. Trade is not a big portion of its GDP. So India should do okay in periods of low growth globally. Commodity prices fall. That obviously helps India. Consumers in India are the main driver of the economy. And so that's why the fact that everything is going to be okay this year, maybe even extremely well, that's not necessarily a good thing for Indian stocks. Foreign allocators are going to start looking, and they're going to say, well, if there's growth in the world, I should be in commodity-linked emerging markets. I should be in China, which has been doing terribly for 2 years. I shouldn't be in India. And that's what I think is a problem right now. I mean, it's very challenging if you're sitting and you're thinking about allocating to India at this point. If the recession narrative truly is wrong, and if we're going to be fine, I'm not sure that India is going to outperform the other emerging markets. And that's going to continue this hangover, and it's going to continue to appeal to foreign allocators to move out of India, which is just going to pile on negative sentiment at a very bad time. But I think you're right. I think there's obviously going to be many, many interesting stocks in Indian markets that are just going to get hurt right now over the next couple of months for no good reason. And I think those are going to be gems for the rest of this decade.
So, I mean, there is no argument to be made that India could decouple from this whole Adani Group crisis purely because, we have a couple of good things going as well. I mean, growth is picking up, inflation is under control, a lot of the COVID-related issues are behind us, consumption has picked up in a big way, capex is coming back. Don't you think all of that could negate the overhang that this Adani crisis is having on the Indian markets?
I would put it the other way. I think the Adani crisis is a part and parcel of the overall macro story. So in other words, I don't think that it's the Adani Group. The Adani Group is just sort of like a needle that pops the balloon. I apologize for the pun. We in America are obsessed about balloons at this moment. But I think that that's sort of something to keep in mind. So I think that it's going to be very difficult to overcome the negative sentiment and the overhang. And just, again, remember, India has done extremely well for 3 years. If it has 6 months of underperformance, that's kind of what happens in macro markets.
All right, Marco, great to have you with us here. I have to tell you that we've overcome many other crises sort of before when we've had large business conglomerates go under. And of course, that is not the situation here, but markets move on, I mean, as you would also agree. But point taken, maybe some time correction may not be entirely a bad thing after the huge outperformance. Thank you very much for joining us and hope to have you back soon again with your thoughts
Absolutely.
and your perspective. All right, thank you. We'll take a very quick break here. Our list of top stocks to watch lined up next. We're back in just a bit.
Good morning once again, folks. The SGX Nifty is indicating a good start today. It's a 90-point bump up, actually. So in that context, the bulls have it this morning. Whether they hold on to it or not, time will tell, because it has been a volatile last few days. But our entire research team is here to help you prep for the day and tell you about all the stocks that you can keep on your radar this morning. So let's welcome them on board. Hi, folks. Morning. What are you looking at, Nigel?
Well, Tata Steel first up. Tata Steel and the numbers look disappointing. Everyone's worrying why they reported net loss. Well, that's the least important of all their numbers. The net loss was because of a tax adjustment. And that was because, in fact, they have an ongoing British pension scheme that they're trying to arrange out there. So don't look at that, but look at the operational performance. And that itself was quite disappointing. It missed our estimates by close to around 20% odd. And we look at two numbers for Tata Steel. One is the India EBITDA per ton. That missed our estimates. It improved by around 1,600 rupees per ton on a sequential basis, but it still fell short of our estimates, which were closer to around 12,000 rupees. On the Europe EBITDA per ton, we were working with a loss. Well, the loss came in worse than expected. Couple of factors played out here. One is realizations were weak. In Europe, particularly, some of those contracts got reset. And because of that, realization pressure continued. For the India business, the reason of the improvement was the coking coal cost, well, they cooled off. And that's what could have helped them to some degree, along with operational leverage. Southeast Asia has been struggling. It continues to struggle. And now the problem is the debt is stagnant at around that 71,000 crores odd. So I'll be speaking to the management later today. Let's see whether or not we can get some clarity about how Q4 is shaping up. But for starters, that one opens up in the red. Let's go across to Vivek. Though, Vivek, you're tracking Adani Transmission. How are those numbers?
Well, good morning. Adani Transmission declared its results yesterday in the dying minutes of trade. It's been a good set as far as if you're only looking at the numbers. Revenues up almost 22% on a year-on-year basis. EBITDA up almost 64%. Margins, expanding almost 1,000 basis points, coming in close to the 41.6% mark. And profitability higher by 78%. However, a couple of things to keep in mind. The transmission business did quite well on the back of higher availability. However, the distribution business was impacted by higher coal and power purchase prices. However, the company managed to offset that by fuel adjustment charges recovery as far as the monthly billing is concerned. Just having a look at the stock internals, since Jan 24th, there have been two circuit filter revisions, first from 20% to 10% and yesterday from 10% to 5%. And the stock has been hitting the lower circuit of 10% for 3 consecutive trading sessions. And since Jan 24th, the stock is down over 50%.
Okay, all right. Thanks a lot for that, Vivek. Well, let's talk about Hindalco then. And Novelis came out with its set of numbers, which is bulk of their profitability. And those numbers as well were disappointing. We were bracing for a weak set of numbers, but they were weaker than expected. On the top line, there was a bit of a dip because shipments were lower out there, telling you the demand was a little bit soft, and also you had destocking that took place out there. In terms of the EBITDA number, well, the EBITDA trend should come up for you. It was down by close to around 33% on a year-on-year basis, came in at around 341 million odd. There was no operating leverage because volumes were lower. Second factor is the spreads. Well, they didn't work in their favor. And the third factor is that, in fact, the high energy cost is something that have hurt them. And that's why the EBITDA per ton, the street was saying there'll be a compression, but they didn't think it'll come in at $376 per ton, which is precisely what's happened. The management says in Q4, it recovers to say around $400 per ton. And in the second half of next fiscal, it goes to $500, $525 per ton. But this number was disappointing. For the next quarter as well, expect some sluggishness. And on the debt front, it's gone up by $100 million. So disappointing set of numbers coming in from Novelis, and Hindalco as well will pull back a little bit. But on both these two, Sonia, Tata Steel as well as Hindalco, both of them, they've gone into these numbers under pressure. So let's see how much of the bad news is already in the price. But what about Apollo Tyres? Good news there.
I'm going with green over there because, the commentary from the management was pretty good, actually. 9 out of 10 for their commentary. They did mention that the OEM demand, that's coming in, from both passenger car radials and truck and bus radials is very strong. Only the export demand continues to be under pressure because of what's happening in Europe, as we told you earlier. The management has said that in Europe, the demand outlook could remain challenging in the first half of the new calendar year. In India, though, the management expects the input costs to correct further by mid-single digits in Q4. Now, two very positive things. One is that the company has lowered its capex guidance. Now they will spend only 700 crores for India, which is 75% of the earlier guidance. Now, why this is important is because it's in line with the stated intent to focus on the ROC improvement and the free cash flow generation. So they've brought down their guidance so that they can, improve their return on cash as well as their free cash flow generation. Return on capital employed and free cash flow generation. Apart from that, the company has also reduced their consolidated debt. So the debt has gone down to 4,800 crores in Q3 from 5,500 crores last quarter. And this is because of an improved performance as well as a reduction in working capital. So a reduction in debt and as well as lowering of its capex guidance to meet its return ratios is something that the street could take positively today. The stock in any case has had a fairly smooth run. It's up almost 20% in the last 3 months. But let's go across to Abhishek. He's tracking LIC Housing and Muthoot Finance. Abhishek, over to you.
Well, as I had suggested in FinStreet, we are seeing customers moving away from gold financiers to banks, and that is hurting all the gold financiers as well. Muthoot Finance, on the other hand, this time around has performed better than Manappuram. Muthoot gold loan portfolio growth is of about 4.8% YOY and about 0.6% sequentially. However, on the other side, Manappuram's gold financing business saw an AUM decline of nearly 9% YOY and about 3% quarter-on-quarter. So the AUM growth has picked up from around 3.5% in the previous quarter to right now about 5.6% on a YOY basis. The net interest margin has also improved by 80-85 basis points, which suggests that they went in for P&L this time around. So they have concentrated on the yield on the net interest margin and give up on growth. Gross NPA ratio, that has deteriorated. It is now 2.6% versus 1.7% in the previous quarter. The P&L, both the NI and PAT is above our poll. LIC Housing Finance, that's a weak set of numbers, and it's a surprising front given the fact that all the other HFCs are really performing well. So they have seen disbursals decline both YOY and quarter-on-quarter, YOY by around 9.5% and sequentially more than 4%. The individual disbursals, that's down more than 10% YOY and about 4.3% quarter-on-quarter. The AUM growth has been tepid at around 2.3% quarter-on-quarter. The net interest margin has improved sequentially to 2.42 versus 1.8% in the previous quarter. They have seen elevated provisions this time around, which is up 104% quarter-on-quarter. So the ECL provision, that's up about 15.5% quarter-on-quarter, leading to asset quality remaining stable or improving sequentially. So PNL in terms of NI, it's a beat on our poll. However, the PAT is below our poll. Back to you.
All right, Abhishek, thanks very much for that. We, of course, have a few of those managements with us over the next 2.5 odd hours as well. Now, JK Paper, Balaji Amines, VMart, SJVN are the other names which reported. Sonal is here with quick update. Sonal, hi.
Good morning, Prashant. Let me start with Balaji Amines. The management had told us earlier that yes, there are some demand concerns in the pharmaceutical segment, and Q3 numbers on the back of that will be weaker. So this time around, revenues are up 4%, but EBITDA is down 18%. Margins have declined by around 600 basis points, leading to a profit decline of 17.5%. Majority of it has come in their standalone entity. The company has said now on smooth accessibility of raw materials, they expect to increase capacity utilization of their legacy products, but that will happen in FY24. VMart, another weak set. While revenues were up 12.5% on a YOY basis, EBITDA declined 13.5%. We have margins which declined by 600 basis points, leading to a profit decline of 65%. If we look at the internals, the same-store sales growth, that's up 1%, footfalls are up 13%, but conversion is down 9%, and 36 crore rupees of expenses, they have gone in the Lime Road business integration as well. JK Paper, strong set of numbers, revenue growth of 60%, EBITDA is up 125%, margins are up almost 1,000 basis points, and profits are up 121%. That should be in the green in trade today. SGVN reported overall a muted quarter. Hydropower generation is down YOY, and that's why we've seen a revenue growth of 0.5%, but EBITDA is down 0.7%. Margins have declined. Net profit is down 22. Net profit is up 22%, but hydropower generated units which were lower on a YOY basis. So going with red as far as SGVN is concerned.
Okay, thanks a lot for that. That is a handful of stocks that we're looking at. Here's a quick recap in case you missed out on any. Stocks with positive news flow this morning. There's Adani Transmission, Apollo Tyres, Muthoot Finance and JK Paper. While stocks with negative news flow, there's Tata Steel, Hindalco, LIC Housing, Balaji Amines, VMart Retail and SJVN. But all eyes will be on what's happening across the globe. Brent crude is now around $82 a barrel. It has risen about 1% odd. It was a choppy last few days. China demand hopes are coming back. So Manisha Gupta is here to tell us all that's been happening there so far. Manisha, good morning.
Sonia, morning. Thank you so much for that. Well, yes, some recovery coming in for the crude oil prices, as IEA says and tells us to CNBC-TV18 also that there is an anticipation of strong Chinese demand going forward. Also, they see tighter energy markets in the second half of this year. Also, the Turkey earthquake has led to some terminals suspending operations, and that's adding premium to prices too. But not just crude, the rubber prices also have rebounded quite smartly. You know, in October, we were trading at 115 cents a kg, which is now risen to 140 cents a kg, which is a near 5-month highs for rubber as well. The only sector that still continues to languish is the metal prices. Aluminum is off with 7-month highs. Copper is trading at a 4-week lows as well. And we've seen zinc prices come off its 5-month highs too. There has been some increase in inventories, the strength in US dollar, and a very overdue profit taking finally seen in the sector.
All right, Manisha, thanks very much for that. That's commodities in focus. We'll take a very quick break here. Vinity Saraf Muthreja, Managing Director of Vinity Organics, will be joining in for a quick discussion on the third quarter results that follow. That conversation coming up in just a bit.
Welcome back. We have so many stocks to discuss, so let's get straight to it. Dipan Mehta, Director of Elixir Equities, is joining in now. Dipan, first things first, I wanted your thoughts on some of the Adani Group stocks. Adani Transmission, for example, the numbers were quite good. I mean, the fundamentals they haven't changed, I'm sure. Revenue growth of over 20%, profit growth almost 80%. And now after the promoters released some pledges, there was a bit of a recovery in these stocks. Now, from a long-term investor standpoint, do any of these Adani Group stocks make sense to buy right now, or is it a strict avoid from your end?
Good morning, Sonia, and thanks for having me on your show. See, even after the correction which has taken place in Adani Transmission and some of the other Adani Group companies, they are still trading at very expensive valuations. And when this kind of controversies are there surrounding the company, I think from an investor's perspective, it's best to just wait and watch and let the dust settle down, and then perhaps take a call on investing in these companies. But I think they're great trading opportunities because of the volatility which is there. And that, I think, attracts a lot of traders. So that one can certainly trade in them depending upon the volumes and the charts and price movement. But from an investment perspective, I want to put a hold on all Adani Group companies.
Got that. Deepan, hi, good morning. What about the big movers from yesterday? Paytm has seen some interest back. The numbers, of course, came through. We had Mahindra & Mahindra Financial, which saw a big surge yesterday. Second quarter of, decent performance after many quarters of disappointments. Anything interest you there?
Yeah, good morning, Prashant. I think Paytm numbers were exceptional. And clearly, I think management is listening to the market and they are achieving their targets earlier than what they had stated. And the fact that they have gone EBITDA positive will be very well received. The stock price also has moved up accordingly. And it's a unique business model. I think it's evolving as well. And even the street and analysts are trying to understand the company going ahead. So I would keep it on my watch list, but again, until it doesn't declare solid profits and we have better data points to value it, it would be a wait and watch. And the other company which you said
M&M Financial.
was M&M Financial, yeah. M&M Financial had a very sketchy track record, and whenever things go sour in the vehicle financing space, M&M Finance, their NPS suddenly start to pile up. But these are great times. I think M&M per se volumes have been increasing, so they have a good captive market to provide finance to. And certainly, I think they have cleaned up their books and now looking at the next 2-3 quarters in very positive light. Valuations are reasonable given the M&M brand. So you could have a nice trading rally, or stock could certainly do well over the next 6 months or a year or so. But this is not something which I like to have as part of my core holdings or hold for a long-term basis. There are much better NBFCs, the likes of Bajaj Finance or Chola for that matter, Sundaram Finance, which have proved their mettle even when the entire NBFC space was under a lot of pressure. So my preference is for companies which have sustained earnings growth and which have been able to manage their NPAs even during the toughest of times. I think that's the strategy as far as NBFCs are concerned. So M&M Finance I'd like to avoid, but there's no denying the fact that based on these numbers, you could have a very good rally over the next few months or quarters.
Okay, all right. Dipan, request you to stay with us for the time being. Let's welcome the management of Vinati Organics. They posted a rather good set of numbers in the third quarter. The company clocked in solid growth and also margin expansion was something that the street will like. Vinati Saraf Mutreja, the managing director of Vinati Organics, joins us. Hi, Vinati. Good morning. Thanks so much for joining in and congratulations on a solid showing. Now, I'm looking at your 9-month performance and you've grown by close to around 40% with margins in that vicinity of around 28%. Though in the past quarter, margins were in excess of around 30%. Now, in the past, for FY23, you were guiding for 25% revenue growth with margins of around 28% odd. Do you want to revise that since at the 9-month mark you're doing so well? And also, what's the outlook for FY24? Go ahead.
See, Q3 has been relatively good for us, and Q4 we expect to do in line with Q3, mainly because the demand for our products is quite good. ATBS remains strong, so does IBB. IBB actually has picked up quite a bit starting the previous quarter, and we're seeing that growth in Q4 as well. IB remains stable. Butyl phenols, again, we are gaining market share. We've run at about 60-65% market share. So Q4 should be in line with Q3. Also, there was a margin improvement because, again, now, when the demand is good, spot prices go up. Also, raw materials were high in Q2, and we have a quarterly lag in our pricing system. So that was reflected in higher Q3 prices.
So you end this year closer to around 2,200 crores of revenues, 2,150 odd?
Yes, that's about right.
And margins?
Well, I think one can expect EBITDA margins to be about 30% of that. Little
so
lower.
30% is compared to 28, right, Najib?
28% for the first 9 months, and for the past quarter it was more than 30%.
Yeah, so
32.
A full around 30% or so. Got it. Vinati, just a quick point on the expansion that is underway at Vinati. I was reading a note which says that you are prioritizing ATBS expansion over everything else. Can you talk to us a little bit about that? What is that expected to do to your earnings profile, revenue and earnings profile, once this comes on, by when?
See, in ATBs, we're adding a new line. Now, our total capacity will increase from 40,000 to 60,000 tons per annum. The reason we are prioritizing is because there is demand for that product, and also it's a brownfield expansion, so it's easier to implement as against the other projects which are greenfield expansions. Again, now that is keeping in mind growth for the next 5 to 7 years. Year on year, one can expect maybe an extra 5 to 6,000 tons of ATBS.
Okay. So since you said the demand is picking up in a big way, what kind of average revenue growth do you think you can eke out in FY24? And what are the segments, the sectors? You're present across segments, whether it's pharmaceuticals, oil and gas, textiles, adhesives, etc. So which is the pocket that's looking the strongest now, and what kind of revenue growth are you targeting for the full year FY24?
Sure. See, the ATBs expansion will only come on stream not before December 23. But we expect revenue expansion, revenue growth in FY24 coming from butyl phenols as well as the antioxidant business, which we will be merging soon with VOL. So again, one can expect a growth of about 20%.
Okay.
All right. That's 20% revenue growth in FY24 is what you're looking at, right?
Right, yes, that's right.
Okay, and on the margin front, is this 28 to 30%? Is this a band that you're looking to, is this something you can sustain in FY24 as well?
Yes, absolutely. 28, 29% seems quite sustainable.
Okay, all right. Vinity, just to clarify, when does the merger go through?
So we will be having an EGM. So we are waiting shareholder approval end of February. Then we need the final hearing from NCLT. So maybe in the next 2 months or so.
So Viral Organics, say by the first quarter of FY24, do you expect it to be done?
Yes, Viral Additives. Now Viral Organics is also.
Viral Additives. Okay, all right. And butyl phenol, what can it contribute? I mean, this year, what is the rough revenue run rate it should do? And for the coming year, what can it do? At peak, I think it's around 700 crores, 800 crores odd?
Yeah, see, this year, maybe butyl phenols contributed about 250 odd crores. Next year, again, if Viral 50% of the butyl phenols capacity is to service Viral Additives, the antioxidant business. That picks up, then you can see butyl phenols running at close to 90% capacity.
Sorry, I didn't get that. Viral Additives, I think the last time you had said that it has a potential to clock in 500 crores in terms of revenues. Do you stick with that?
Viral Additives is a forward integration of the butyl phenols. The butyl phenols are used in antioxidants. So as antioxidants picks up, so does our capacity utilization of butyl phenols. Combined at full capacity, Viral Additives plus butyl phenols do have, revenue potential of maybe prices have softened now of 800 to 900 crores. But I think that would take about 1 year or 18 months to achieve. So in the next year, one can expect maybe Viral Additive capacity to be 50% and butyl phenol capacity to be about 70%, 65, 70%.
Okay. All right. Very quickly, before we let you go, how is demand? I mean, have you seen any kind of slowdown since bulk of your revenue comes in from the export market? Have you seen any kind of slowdown or nothing as yet? You have our quarter numbers in front of you. And I'm telling you, Q4 is in line with Q3. So, the ibuprofen market has picked up, shale gas industry, oil and gas is doing well. So at least for our exports, freights have come down, there's logistics has eased down. So things are looking positive for us at least. All right, Vinity, good to hear that early in the morning. Things looking up for your business. We don't get very often managements who are exporting who are that confident, but maybe it's the product that you're servicing as well. And you're seeing solid demand out there. So good to see that you'll end this year with solid growth, and next year as well, you're guiding close around 20% growth. Thanks so much for joining in and filling us in with those details.
Also, I think, this question merits importance because there have been production cuts by a lot of these large clients like BASF, etc. We had spoken to Vinti about it last time around as well, where she said that at that point in time, there was no major impact. And as she said, now 20% is something that she's holding on to. In fact, if Dipan Mehta is still with us, just want to get a quick comment in from him as well. Okay, we'll do one thing. We'll take a quick break and come back. We'll chat with Dipan in a bit. We'll get our technical experts going too to find out what to expect in trade this morning. Stay tuned.
Welcome back. SGX is indicating a strong start. 891 points, 17,852 is where we're at. There's 8 minutes to go for the pre-open session. Sudarshan Sukhani is with us, and so is Mitesh Thakkar for a quick technical check on things. Gentlemen, good morning. Good to have both of you here. Sudarshan, how are things looking? I mean, if we do get a 80, 90 point higher start, what would you do?
Good morning. See, since last week, I've been consistently saying that we are in a short-term uptrend and we should be looking only to buy. That view continues. Now, there are many people who must be carrying long positions. It is not as if the markets are created every day. It's a continuous process. So for those who have long positions, my suggestion is stay with them, keep a stop under 17,600, and slowly we'll trail that stop. But as far as this today is concerned, this would be a stop loss. Now, for people who have either closed your positions or actually want to take a new position, did not do anything, the gap up is still an opportunity to buy. It's not going to be the same. I mean, suppose you bought at 17,600, you won't get the same yield or profits if you buy now. But buy on an intraday dip, we could be looking towards a target of 18,030.
All right. What about you, Mitesh? Good morning. Do you also believe that this market is perhaps heading a bit higher? In fact, the SGX Nifty is definitely suggesting that. If yes, what are the targets that you're looking at on the Nifty and individual stocks?
So, good morning. One, I think, yesterday also we were of the opinion that we should be buying the dip. We did get, a decline which didn't recover, but the overall intraday setup has improved dramatically. And I think we should possibly look at some traction on the upside today. The gap up would definitely help and possibly propel us beyond 17,800 to begin with. I think once that happens, good chance that 17,980, 18,000 becomes the trading target. So in the short term, the hourly, the 2 hourly chart suggests that we should be trading more with long buys.
Okay, all right. And what about individual stocks, Mitesh? What are you looking at?
Yeah. On the stock side, Nigel, good morning. I have more of buy calls very clearly in line with my opinion that there should be more long trades or buy side trades being taken. So I have 3 buys and a sell. HDFC AMC after a big decline is reversing. So that's the first buy call. Keep a stop around or just below levels of 1885 and a target of 1960 on the upside is what I'm looking at. M&M Finance, I think the stock was buzzing numbers and then a gap up and technically also getting into a uptrend. That's a buy as well. The stop loss here should be around 254 or just below it and a target of 280 can be looked at. And Voltas is a buy as well. It's also reversing after a correction. So this is a buy. It could give a trading rally to about 860 levels and keep a stop below 810 here. The solitary sell call is Jindal Steel and Power. Keep a stop at 567. Look for mild correction pullbacks to about levels of 532.
Okay. Sudarshan, how about you?
Well, the trend is up, so we're looking to buy. Idea is to buy mid caps on strong dips. AB Capital is one such stock. It had a large correction. That correction seems to be getting over. Aditya Birla Capital, I think. So buy with a stop under 139. REC Limited has been a favorite. It's a dividend-paying company and actually has appreciation also. Everything going for it. Small correction is complete. Buy with a stop under 118. Asian Paints is my only intraday short sell. Intraday short sell with a stop above 2780. And finally, that big boy Bajaj Finance is a buy. We've been consolidating for the last 1.5 months, and that consolidation broke out yesterday. That's a buy with a stop under 59.55.
Okay, thanks a lot for that, Sudarshan and Mitesh. Let's take a short break. We'll come back with the pre-opening rates. We'll also have Prashant Tripathi of Max Life Insurance to discuss their Q3 numbers. Also, the impact of the budget announcements that came through. So do stay tuned in.
Is your